You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for one of the rockin' shows on our network, The Option Block. A little bit of bi-weekly options goodness injected straight into your life every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern. If you can, join us live. We'd love to see you. We're there over there on Mixlr, Mixlr. That's 3 p.m. Central, 4 p.m. Eastern every Monday and Thursday. So if you can't make it, I know a lot of you work or some other things going on, you can't make it. Your boss gets mad if you stream live. I get it. I understand. Enjoy the podcast. That's what it's there for. But if you can't make it live, you're one of the hardcores who really wants to hear it instantly. You're one of the ones people who always writes into us saying, I wish the podcast could come sooner. There you go. You got this now. And if you missed the live stream, you can still grab it in the intervening minutes and hours before the lovely edited podcast goes live the next morning over there on the Mixlr page. We'll leave it up there for about a week or so you can always get it up there as well. And, of course, you can always find all of our programs and all the archives, theoptionsinsider.com, or over there on iTunes, or over there on Stitcher, or wherever you find your favorite podcast programs, iHeartRadio, so on and so forth, including via our mobile app available for iOS, Android, and the ever-popular Fire OS. And, again, however you listen, live via the Mixlr after the fact, on the podcast after the fact, maybe on the popular Latvian version of the iTunes Store, whatever floats your boat, however you listen, hit us up. Your questions, your comments. We do love to hear from you guys at the end of the day. You're kind of the wheel that turns the show. Without you, it's just not as fun. I got to listen to the Rock Lobster and Uncle Mike all day, which, come on. You guys are those two. Who would you choose? Speaking of those two and their abundance of umbrage, let's welcome them on now for some of that. Starting off with the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com, who is a sage about many things, including when to shop for appliances in Maine. Mr. Rock Lobster, welcome back to the program, sir. This is the part of the show where you talk, Mr. Rock Lobster.
Those darn Maine ovens, he might think it's a phone.
Oh, my gosh. You know what? It's just
You're not
all
off
these
to
buttons.
a good start.
It's all these buttons.
So yet another week on the network where Andrew has forgotten to unmute himself. It's like you've never done this before, sir.
I know. You know what, though? Think of it this way. It's job security for Kyle.
That's true. It gives him work to do in the edited version. Unfortunately, the poor schmoes who tune in live, I should say, they get nothing but your goodness straight into their ear holes. So beware, listeners, if you aren't going to tune in live. That's what you got. You get the Rock Lobster, straight, unedited, unfiltered, straight into your ear holes for good and bad, and sometimes not existent because he's not talking. All right, and I think we're also joined now from the water garden capital of the world, the former pickle capital of the world, St. Charles, Illinois, by Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program. To you as well, sir.
Oh, if I could be more excited, then I'd have to pinch myself. It's another day on the option block. What could possibly make me more happy? Indeed.
Except maybe keep it on rolling into our first segment. Yep, it's time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. Like the name says, this is indeed the portion of the program where we break down what was moving, shaking, rocking, rolling in today's market activity. A little bit of action out there in the S&P, trending down a little bit. So got down to low about 23.48 before a little bit of rally mode kicked in, closing today, or getting as high, I should say, right around 23.64, and then closing the day right around 23.57. So a nice little range to the day, not perhaps as quiet. So ending the day up about 0.25% or so, a little over 4 handles. The Dow, ever the laggard, only 17 handles, and the Q's trending down slightly, but not a heck of a lot going on out there. VIX cash also, despite a little bit of a range in the S&P, giving up some of the ghosts today, off about half a handle, right around 12.36 or so. It needs to stay right around here, a little bit higher. I don't want to repeat of last week on volatility views tomorrow, where we're hovering right around 12.25, and it's a battle between me and the greasy meatball, and then it ticks down lower. We can't have that again, so let's just stay here, or perhaps a little bit higher, not too high, because then it gets into where Russell's always buying his vol on the upside, so we can't go too high. But right around this range is perfect for me and my 12.5 prediction for tomorrow. But it is an interesting one going on out here today, and let's see what my cohorts have to think about. A little bit of action, not a ton, but when we're beggars can't be choosers, so we get a little bit of movement, we'll take what we can get. Mr. Uncle Mike, let's start with you. What caught your eye in today's activity, sir?
Well, I mean, energy was of all the sectors, energy was the biggest mover. I just have XLE up 60 cents on the day. It wasn't to say that that's a phenomenally huge mover. Would definitely be something that could be construed as misleading. Oil did rally today, of course. Oil actually, it's up, let's see, 51.70 is what I have as the closing price on it. So we are starting to get a little bit of movement in oil. Also with that, we had a little bit of movement in natural gas, not quite as much as the oil percentage-wise, but it did move a little bit to the upside. So that's something that could definitely be a contributor to such a thing. Also throughout the day, a couple of things. The big story that seemed to me was the market mover of the day, but should have probably moved the market more, I would think, is that the story that's going on right now from a geopolitical point of view is what's happening with the chemical attack over in the Middle East, and Trump's handling of it, whether it's good, whether it's bad. I'll leave that for the listeners to decide. That's something that is the big news right now. Trump is meeting with the Chinese in Florida. His plane just got there, I believe, just recently, just in the last hour or so, I believe. That's also very big. They also could be very big. It seems that President Trump is putting more of the focus onto North Korea than the Middle East. And so a lot of speculation is that he wants the Chinese to he wants to use befriend the Chinese, so to speak, maybe not befriend, but come up with a deal in some way to where the Chinese can put pressure on North Korea to stop all those nukes that may or may not be happening. So there's a very complicated, tangled web of things going on in the geopolitical sense. But with all of that going on, we still didn't really move that much today. With all that going on, the market was up around 12 points down on the S&P today at the high. We closed ahead 6. But with that, the other story to mention is with the notes from the Fed meeting yesterday. Markets were high. Come 1 o'clock Chicago time, the Fed minutes were released. Markets were not so high. Markets went down very quickly and very steeply. But they still ended up really not in that bad of a spot. So with everything that's going on right now, the market's still very powerfully sideways at this stage in time. So that's what I'm noticing in this. And I'm curious to hear what the Rock Lobster's take is on all this.
Mr. Rock Lobster, same question for you. Since Uncle Mike brought up the macro geopolitical spectrum, interesting anniversary today as well. 100 years ago today that we voted to go to war, start the war in World War I, kind of a forgotten landmark, a forgotten war in many regards, because we did it all again about 20 years later and that has trumped it in the minds of many people. But still an interesting landmark. So we got involved in one of our first big European complications. This time 100 years ago today. Not saying there's a parallel between Syria, obviously a much different thing, but still worthy of thinking about on a day like today. And that said, spiraling away from the madness that is the geopolitical spectrum, what caught your eye in today's market activity, Mr. Rock Lobster?
You know, it's funny. We haven't mentioned the word macro since the Viceroy, it feels like.
Who is that? Who are you referring to? I'm not sure.
The guy with the hats. The guy with the hats.
Oh, yes.
Yes. You know, it just we haven't had the Fed has been kind of been out of the game. I thought part of yesterday's sell-off too was Ryan was saying, well, you know, we're not going to get anything done with taxes, or, you know, we can't. We're having trouble. I don't know. I just think that guy's having trouble. So he's having a hard time getting anything done, I think, really. Except changing our internet privacy, which I'm still scratching my head on that one. I don't quite understand it, but anyway, as far as the world and Syria and stuff like that, you know, 2012 we did have a little pop in VIX from that Syrian gas attack. I guess, you know, they denied doing it the first time, so I'm assuming they're denying doing it the second time. And that's enough to give us a little vol. But I think, honestly, the market wants to rally. We had a huge payroll report yesterday. Apparently, everybody wants to hire more people again. I don't really know the reason why the numbers are starting to jump as much as they are, but it feels like they are. So I think the underlying economy is looking okay. So that's usually, and I think there's a big expectation, or actually there is some expectation now for better corporate earnings. It's been a while since they've actually tried to, I think, ratchet the numbers up. So the market's giving some multiple to forward values, and it's been a while since they've done that. So, you know, what do we do with all of that? Well, you have the continuing strange story of now Susan Rice, of what is it, Nunez leaving. He resigned his chairmanship. He recused himself. So you've got the Russian scandal thing. I guess whatever it is, I think that adds a little layer of volatility. The Syrian thing adds a little layer of volatility, and I think you can see that in, you know, VIX cash traded below 11 yesterday on the rally. So it feels like the market wants to rally and take vol down to kind of what I would say is sort of low rally levels, you know, into the 10 handle, and everybody's woohoo, things are going great. It wants to do that, but every time we kind of get there, it stops. There's another surprise out of Washington, and it seems it's going to go like that for a while. So I think if you want to watch it, just, you know, it's funny because we're looking at our chat room about watching the April ordinary future in VIX. We're waiting for it just to drop, because it's holding, you know, it holds up to $2 in premium or more when VIX drops. So it's hanging there because it keeps thinking the cash is going to move up and down. Volatility, it seems like it keeps getting beaten around by the algos and stuff in the S&P 500. So that has not gone away. So we've got the undercurrent of expecting better economic news. We have kind of the temporary disappointment in Congress and the administration, because now all of a sudden they can't quite deliver on maybe the stuff the market thought they could. And then you have whatever geopolitical stuff. So you got kind of a good thing and a bad thing, and overall that equals kind of not going anywhere. And I think that's where we are. And until one of those levers changes somehow, to the positive or to the negative, if it happens to the negative, unfortunately, you know, that will be the decider. It will be the decider.
the decider, Mr. Trump. That said, speaking of VIX, we were joking earlier in the year, end of last year, that, Trump ain't a single-digit VIX president. You said yesterday, the sell-off, we did actually hit single digits ever so briefly. So maybe that's the new narrative. Maybe Trump, despite all the bluster and bravado and noise going on around the administration, really is a single-digit VIX president at the end of the day. What do you say to that, Mr. Rock Lobster?
I think, if you have a better tax system, that would be market positive. The market likes to be able to look far into the future and be happy. If they see lower taxes, it'll be happy. If it sees less regulation, no matter what it is, and everybody complains about it, it'll be happy. If it sees kind of quiet on the geopolitical front, vol will go down. So all of those things make volatility go down, and whether you agree or disagree with the policy, volatility goes down, and stocks go up. So right now, I think we're not seeing enough policy to really make. There was a lot of hype. I mean, I think we rallied pretty hard on things could become more economically positive, but we're a little short on the delivery on that right now.
Speaking of the delivery, we've talked before on the show. It's been a little while since we checked back in with one of our favorite whipping boys out there in the world of pharmaceuticals. This is of course Valeant, ticker symbol VRX. Closing today, actually a little bit up on the day, up about 1.5% after trending down earlier today. Actually hit an 8-year low of 947 earlier in the morning here today. So trends haven't been looking good. I'm sure most of you are familiar with Valeant. They've had a lot of scandal and controversy in the headlines of late. If you're not, they're one of the ones that got lumped in as price gouging by Congress last year. They're also sitting on a boatload of debt, which has never been a good thing. I believe their debt load about 30 billion or so with the B that they have to pay off, including trying to sell off a subsidiary, an Australian subsidiary called, I believe, Inova. Looks like they're expecting or hoping to get at least $1 billion for that. That's not really materializing out there. So hence the 8-year low in the stock. But since we're talking volatility, that's what kind of brought me back to Valeant, because they have been popping in the vol of late. They were trading about 55% in their 30-day vol as of last Friday. This morning was about 71%. Right now, about 77%. So the 30-day vol spiking, not too surprising given the fact that they're selling off a little bit, but still kind of interesting. Actually, also not a even though despite setting that new record to the downside, not a rock'em sock'em robots day from an overall volume perspective. Only about 30,000 contracts lighting it up today, this is a name that averages about 75,000 contracts out there. Also of interest right now, if you look at the overall open interest, you'd think, given how much downside there has been in this name of late and hitting that 8-year low and everything else like that, you think there'd be a sizable open interest in the put side of the fence, but actually that's not the case. Calls outnumbering puts right now about 1.3 to 1, not just in the volume today, that was about 2.3 to 1, but actually in the overall open interest. So kind of interesting. Maybe some people prepping for a pop out here, taking advantage of, shall we say, the higher volatility, or perhaps being heedless of that higher volatility, scooping in some options nonetheless. Interesting stuff. Mr. Rock Lobster, I'm sure we don't talk about this one on the show that much, but I'm sure this one pops up in your chat room quite a bit because it's an active name. It's delivering some vol, which is in and of itself a standout thing these days. I'm sure your hardcores, your crazies over there in the pit chat like this name. What's your take on all things Valeant these days? Popping a bit in the vol, selling off in the underlying, and in general having some issues.
We've talked about this. We have looked at it. We've only probably done one trade in it this year. I remember when it dropped to $100 and everybody thought, whoa, $100, that's cheap. And then now it's $9.65 and nobody's saying it's cheap anymore. Yeah, we have some guys actually in our chat room that have some very negative thoughts on Valeant. Think they do bad things and they gouge people on prices, and it's just an unethical place. And so, who knows? I think their routine for making money is over, and it's hard to really. It's one of those things where it is hard. it is hard to really figure out what the company's worth because it still says it makes money. And I know they have a huge debt load, but they've definitely gotten smoked. But it looks like it could be the cheapest drug company on the planet. So, although I don't know if changing their business practices will help, it might help the stock price eventually or something like that. But at least for right now, it is a stock that still continues to generate, I think, positive cash flow, but it just keeps going down. So right now it is ill, but it is not terminally ill, but it seems like it's close.
Yeah, I would say with this one, the analogy on it, people can come back from this terminal illness, and it's not quite at the stage to where you have like a day to live, but it's not looking good. I mean, let's just look at this. The high of Valeant was $263.81, and that was in August of 2015. So we're looking at roughly 1 year and 8 months, it losing quite a bit of value. And so when that happens, that's not a good thing. Now, granted, if you have some courage and you really want to, if you're looking to really get into something and you feel that it's unjustified, the horrible things with which that have happened to Valeant, I mean, you can look at Apple. Apple didn't look too hot back in the late 90s, and we see what that's doing today. But is Valeant another potential Apple story? I don't think it is. It's one where even if you have one of the best hedge fund managers took a royal bath on it, and I imagine he looks at more than just a chart of that when he invests in it. So that's one thing with that. With it, I think it would be a huge gamble to buy at this point. And if you did, hey, maybe buy 100 shares and just not look at them and say a prayer that maybe someday something will happen. But I can't say that I'm optimistic on Valeant at this point.
I do love the people who trade Valeant, though. They're very aggressive, shall we say, pro and con. People are already chiming in. What we got here? I think I'm not sure if it's Humble Pie or Mahi 5204. It's a whole chain. But he's complaining I said 30 billion. It's only 28 billion, he says, with the B. So there we go. Only 28 billion in debt. Have those words ever been said, only 28 billion? I don't think so. 28 billion, 30 billion, bit of a rounding error at that point. That said, Mr. Rocklouse, before we hop off Valeant really quick, people seem to really like to sink in their teeth into this one. You remember, there was a strangle. Do you recall, we talked about it a while ago, I think we thought it was our friend Ackman. Do you call the strikes and exactly what the heck lit up out there?
I think it was was it the 140-200?
Yeah, there we go. Oh, those puts. That's right. The puts were, shall we say, the contentious part of that strangle. They kind of went against them pretty quick, as I recall.
I think they went like $90 in the money. He sold like 20 or 30,000 of them. It had to be him. I mean, nobody was doing that. Nobody thought this stock was going up but him. But I mean, I guess that's how he made his billions, doing things nobody thought would happen. But just that one time, he happened to be wrong. But anyway, that was that was an impressive trade. We looked at that, remember, like, that's a bold one right now. We thought that was bold, and it was.
That is a bold one. And speaking of some bold ones, let's hit on some other bold ones, because it's that time of the show. It's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the Odd Block. Indeed, the portion of the show where we break down what was catching our eye from an unusual activity perspective today. Going to kick things off. We were talking VRX before Now we're going to switch one of those letters. We're going to go to VXX. This is indeed the popular VIX ETN out there, the iPath S&P 500 VIX short-term futures ETN, to be precise. We've talked about this many times on this program, and indeed a lot on VolViews. I believe you referred to it, Mr. Rock Lobster, as predictably crappy, which is an apt description of this product. Closing today, 1589, off about nearly 2% on the day. It's the name that does some size volume on any given day. The actual ETN itself could be the volume leader on some of the exchanges. So this thing does light it up. The options, no slug themselves. They're about, they average about 200, almost 280,000 contracts a day. Today doing about 380. So lighting it up again today. So whenever we're talking options volume and unusual activity out there in VXX, it's always usually somebody doing something for some decent size, and it's usually just sometimes hard to even spot it because there's so much. It's like the big mothership VIX options. You know, there's so much noise out there. It's kind of hard to see the trees for the forest in this sense. And what we found a couple out here for you in particular today was the April-May 15.5, 13.5, and indeed kind of a bit of a funky one, and 14.5 out here as well. Kind of a bit of a spread versus straight up puts. Starting off 15,000 times. Looks like paper selling the April 15.5 puts. Total going up on that strike of about 16,000 and change on the day. And then going off, looks like buying the 14.5, 13.5 put spread out here. Doing that about, starting off, again, about 15,000 times. That's pretty much all the paper that went up there. So looks like they did a little bit extra on the apes, but only left it at 15,000, only 15,000 out there in the May. So again, buying looks like the 14.5. And perhaps doing that spread, either way, size stuff, doing it for 48 cents on the ape, at least that first 15,000 lot, and then 57 cents by 27 cents, 57 cents by 21 cents out there on the ape, on the May 14.5, 13.5 put spread. Interesting stuff here. This looks like, at least on the surface, it appears to be a straight up roll, but perhaps a bit of a roll with a kicker. I'll leave it to you, Mr. Rock Lobster, to dig a little more into that 13.5 leg, if you think it was stupid-esque or if you think it was more spread-esque. Again, we don't usually see people rolling out from a straight up put, an aggressive at the money now put out here, and then going in for a $1 put spread. Obviously, it's not giving you a lot of protection beyond that $1. So if they're that concerned, maybe they would go more straight up. So it could be a stupid. Also, there is a possibility that he's just tired of shelling out for these puts. And he said, you know what, I'm gonna sell some of these 13.5s against it because I just can't afford to keep rolling these puts out here. Either way, that appears to be what he's got going on. Looking back at the year that was, if you were rolling puts, you were pretty busy out here in VXX over the past year. In fact, we talked about this before. VXX is buying longer-term VXX puts. There are not many sure things in the world of the markets or options or trading. Buying long-term VXX puts, kind of setting them and forgetting them, is one of the closest things you're going to find to a sure thing. Just based on that erosion, again, I talked about that many times on this program and on VolViews, and how that continued creeping erosion in VXX. Long-term, that thing is going to erode, and then they're going to reverse split and pop it back up. So if you are buying long-term puts, chances are it'll probably work out pretty well for you. And our friend here deciding that is indeed the case. Mr. Rock Lobster, what's your take on this rolling? Is he rolling to a spread or a stupid? And what are your thoughts either way?
I thought he was rolling to a stupid. We just talked about this exact thing in our chat. It's been the subject all week. The April, I think, is just we're not going to see enough collapse in the April until the very last moment. It feels like, because of all the things that we discussed earlier, Washington, geopolitical, maybe we get some good earnings. So it's keeping the April future relatively buoyant relative to VIX, how low VIX cash has been getting. So I think this person had probably owned some April puts, said, I'm tired of this crap. I'm selling them, and I'm just going to buy a bunch of May puts because after that, earnings will be over. The French elections will be over. Summer's coming. Nobody's going to give a crap, and VXX could be trading $12. So that is how I read that trade. And I have to say that's certainly it's certainly possible.
my first blush was that it was a spread, but it doesn't, you're right, it just doesn't seem with all the things we've seen out here, people rolling to a $1 put spread after having those puts on. It didn't seem quite right, which is why I wanted to do a little more digging on that downside. That's why I'm glad we got you. Give you a little time. If I vamped, I give you a little time to dig a little more and find out exactly what's going on with that leg. So we'll keep an eye. Again, VXX, predictably crappy, as Mr. Rock Lobster likes to say. And in this case, our friend here predicting that the crappiness will continue, at least in the near term. All right, moving on to another name we talked about last week, or actually this week, earlier on the show, which was Ford. Remember we talked about on Monday about Tesla. Kind of the rising tide of Tesla doesn't lift all boats in the auto industry. It's the opposite. It crushes all the boats, including Ford, who's been taking it on the chin of late. Ford closing today 11 1/4, pretty much unched on the day after having not too much of a range really today. So it was a quiet day from an underlying perspective, not so much from an options perspective. This one doing about 66,000 contracts on an average day, about 76, nearly 77,000 today, about 2.5 to 1 puts over calls lighting it up out here in good old Ford. And what we saw was, again, kind of the narrative of the day. Rolling puts, this time a little bit farther out than our friend out there. I keep wanting to say VRX in VXX. But yeah, it was the June 11, Jan 2018 975 put spread. So paper coming in, trading 15,000 of the June 11 puts, and then turning around and also doing the 975 puts in Jan 2018. This one's interesting for a couple of reasons. First off, those puts he bought were out till June, and he's already deciding, again, undoubtedly because the stock is flirting with those levels. He's got a little bit of juice actually on those puts. These 11 puts are suddenly relevant. He probably bought them as some nice downside protection. Now he's saying, we're getting to that moment. Why wait till June when I can still get, what did he get for these things? 41 cents for these puts, which if he waits till June, that will not be the case. So taking those off, which is what I know a lot of people, including you guys, Mr. Rockhouse, like to advocate. If your hedge works for you, do something with it, take it off, and then reestablish. What's interesting, though, is that he didn't just reestablish on the 11 strike again, which would be kind of interesting because he'd be keeping it tight. No, he decided to take some of his money off the table and reestablish, shall we say, a little bit more pessimistically down at the 975 strike. And doing that, like we said, total on the June was nearly 16,000, 15,988 to be precise. And then in the Jan, he did a total of 18,557. It does have the smackings of a roll, even though there is size and open interest on both of these strikes. 55,000 on the June and nearly 100,000, 88,000 on the Jan. Of course, that isn't exactly surprising in and of itself as well, that these put strikes would have a lot of interest in Ford. This is a name that has a lot of people have a lot of concentrated positions in, so a lot of hedging activity. And it's in a lot of big funds as well, so this is the name that's going to see a lot of put action on any given day. And seeing that yet again today, if you've been active in this name, it's been kind of an interesting road. This thing spiking, getting as high as around 14 and some change back about a year ago, and flirting with those levels a couple of times in the interim, and ever since then trending down. Got as low, where we are right now is actually pretty close to the low. It got as low as 1107 back in November, right after the election, ironically. Right on the election, I do believe. And then kind of rally-ho mode from there before kind of taking it on the chin. These latest sales numbers for the first quarter, not looking so good. And perhaps all the love moving to Tesla and getting away from Ford. This is an interesting one. This is kind of bearish out here, Mr. Rock Lobster. Obviously, someone's got a long equity position, so their probably net sentiment isn't bearish. But the fact that they're rolling all the way down to a 975 strike, we haven't seen a 9-handle strike in Ford in quite some time. That's getting back to not that long after the bailout period when it was in the single digits and kind of rally-hoed from there. So kind of interesting to see a single-digit strike perhaps coming back to play here in Ford. What's your take here on our friends rolling out and down in Ford Motor Company?
I'm looking at the same thing, and I'm saying, Ford was a $15 stock and it is just so not anymore. It feels like the market is looking at the major automotives. They're in the peak of their earnings cycle. Oil is cheap. They're selling a lot of trucks and SUVs and stuff that make them a lot of money. And I have to say, just the market I'm looking at, Ford yields 5%, 5.3% for Ford Motor Company. That is not the, and Ford has all their legacy issues and stuff like that. It is not a road to happy right now for them. So it's a very, it is a dearth of sentiment until they kind of light the imagination somehow. I can see why they're buying the 9.5s, but it looks like a giant roll too. Could be up to 100,000 contracts by the time they're all said and done. So it pays a big dividend, but I think the sentiment is that the motor companies, or like kind of the old legacy automotive makers, are at the top of their earnings cycle because they make their money off the stuff that sucks up the most gas. And I guess cheap oil will be here for a while, but it's not going to be here forever. So I find it very interesting in the least that the stock is kind of plumbing the bottom. It's not that they're doing horrible either. They might not be knocking the socks off of sales, but one way or another, the market does not like them, but they do print quite a dividend. I'll say that much.
Yeah, not feeling the love, but you're right. It is interesting times out there. They can't make crossovers and small and mid-sized SUVs fast enough in any of these names. Of course, we'll see if that continues if gas prices rally. Either way, interesting stuff, and perhaps a little bit concerning if you're affordable, seeing these sub-10 handle puts lighten it up for some size. And you're right, there could be more size to go. This is clearly not this guy's whole position. If he's accounting for a lot of that open interest on that strike, there could be more to come. Keep an eye on that, listeners. Meanwhile, we're going to roll on into our final name. This is JetBlue. Haven't talked JetBlue on the show in quite some time. Ticker symbol JBLU, closing $20.91, up about a third of a buck, or nearly 2% on the day. It's the name that does about 7,600 contracts a day, doing about 2x that, about 14,500, 68.5 to 1, Mr. Rock Lobster. Of that 14.4 and change, 14.5 and change, only 200 were puts. So the rest, 14,253, came in the call variety, and in particular, a lot of that in the June 21 strike, where someone came in, starting off the day, blasting out 10,000 in one block over there on the Philly, doing it for $1.10. As the day went on, another, looks like about 1,200 or so filtered in for a total of about 12,274 on this strike. Don't see any stock going up against it or anything else along those lines. So this appears to be exactly what it looks like on the surface. Someone looking to grab some yield out here and willing to perhaps forego some stock on the upside north of that 22 handle, 2210 or so up there. Interesting stuff. This is the name that's had an interesting run over the past year. Got down as low as about 14 and 3/4 or so, and then rallied as high as hitting about 23 or getting really close to it back in January or so. So I had about a 9 or so handle range out here, and our friend here thinking on the upside, he's fairly safe at that 21 and a buck, so about 22.10 level, and he's willing to write some calls. Mr. Rock Lobster, we've seen a lot of people do a lot of crazy things for yield. This one, on the relative scale, doesn't seem that bad. What's your take here? It's certainly not rolling 6 months for a nickel, that's for sure.
We have seen that, haven't we?
Unfortunately, we have, yes. Many times.
Many times for a nickel. I think they're looking at this as kind of a dividend. It's another industry where it feels like they're at the top of their earnings cycle as well, or at least that's the indication. And so this customer is just selling some at-the-money calls and saying, woohoo, I'll take them and go. So, again, these are crazy multiples on all the airplane companies. I guess they're printing money because they're paying down debt and stuff like that. But it's another thing with low gas prices. It's another top of the cycle, and this customer just looks like to say, I'll take my $1 and I'll hit the road, or my $1.10, and that's enough divvy for me for this stock. I don't think it's an unreasonable play.
That's enough divvy for me. Never enough divvy, sir. There could always be more divvy. Mr. Rock Lobster may be easily sated when it comes to divvies, but not me. I will always take more. Speaking of taking more, we'll always take more strategy. It's a good thing it's Thursday because it's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody, welcome to the strategy block. It's time for Uncle Mike to regale us with tales of options, wit, wisdom, strategery, and the like. Uncle Mike, we've seen, it's been a relatively quiet period, but we have seen some ranges, perhaps some whipsaw, and even a little bit of range today in the S&P. So it is a time when perhaps people might be concerned about having a good trade turn against them, maybe getting whipsawed or some other things like that. So perhaps, I'm going to go out on a limb here and say perhaps we should talk about that today. What say you to that suggestion, sir? Uh-oh, he's following the Andrew the Rock Lobster playbook of being completely
I was about to say he muted himself.
Mr. Uncle Mike, are you there, sir, from the water garden capital of the world?
All right, I have to admit I did do that.
It's the two of you. What's going on with it? You got mute juice going on out there in the water.
I don't know. Something's going on, I guess. I'm just so excited about the strategy block, I forgot to unmute myself. But what I say to that is never let a winning trade turn into a losing trade. And that's one thing that the Rock Lobster says very frequently, but that's actually one of the few sayings in trading that's actually older than never mind. I won't go down that route. But anyway, oftentimes people see a trade that does well for them, and they're like, well, my profit target is this amount, so I'm going to sit in there till I get to this amount. And people can get burned doing that. So I want to go over a trade that I made this week. I talked about it on Monday, and I said that I would talk about it on Thursday, whether it was be for better or for worse, and thankfully it was for the better. On Monday, I sold right around the close of trading. SPY was at 235, closed at 235.33, and so right around that area with give or take 10 plus or minus 10 cents. I sold the April 13th expiration 234 put and bought the 225 put. So just kind of a wide put spread, and the concept behind it was just to sell a put. And the only reason that I had the other long put in place, it was one of those ones where it was far away. I was just kind of trading it as if the same way I would trade a short put in general. But with that, wanted to have the requirements being met within client IRA accounts and things of that nature. So my plan for that was that if we were to touch or go below the 234 level, that was kind of my line in the sand at that point. What I wanted to do is either roll down the put or just get out of it. And by doing that, I would take a loss. And like I said on Monday, I'd be shamed and ridiculed by my co-hosts for making a bad trade, but I would live to trade another day to get shamed and ridiculed another day, even for making a winning trade if that were the case. Now, thankfully, that didn't happen the following day on Tuesday. On Wednesday, yesterday, markets gapped up. So keep in mind, on Tuesday, there really wasn't a lot of movement in the marketplace, but on Wednesday, we gap up. Markets open up at 236.26 for SPY. And so at that stage was when I got into, I'm like, well, my goal on this, I got a 75-cent credit for the trade. And I'm trying to get to roughly 15 to 20 cents is where I want to get out of this trade at. I like to get around 80% of the potential profit of the trade whenever I'm selling premium in some way, shape, or form. But on the flip side, I'm looking at it, I'm like, you know what? Even though this trade's designed to go another week and a half, I can get out for about half the profit right now. So this is where today's strategy block comes into play. So what do? Do you want to stay in it and risk the entire trade? Or do you want to get out at that point and say, you know what, I've got half my profit already, I'm getting out? Well, what I decided to do is I put in a contingency order. Contingency orders in this situation are great, and there's a lot of ways with which you can do it. But what I did was I put in an order when we got to roughly, markets went up a little bit during the morning. I put in my contingency to where if we go below 236.5, I will get out of the trade. And that was when the market was at roughly 236.90, I believe. And I was expecting to get stopped out. I would have been more than happy to get out with half my profit over the course of 2 days and live to trade another day. Now, with that, of course, the market did continue to go higher. I happened to be watching it. I'm like, okay, well, I'm going to make my contingency at 237. I don't know if I think I did like 236.99 or something like that. I never use even numbers, but that was where I upped the contingency to. Now, of course, the market continued to go higher, but eventually it did go down. And if you look at a chart throughout the day yesterday, market went down. It went down rather quickly to where we actually got as low on the day of 234.54. And we closed at 234.78, but that's a huge drop. And so that's an instance as to where I didn't get the full profit of what I wanted to make on the trade. I was hoping to get roughly 60 cents, but I was able to get out of the trade with a profit of 45 cents. So it's situations like that to where right now I'm in cash. And just to give you an idea of the trade right now, I'm just looking at those options as they close today. I could get into that same trade again if I wanted to, which I don't, for 64 cents. And it was actually much higher yesterday and even at points today. So the moral to the story is that just because you haven't met your full profit, you may want to put in some risk management because of the fact that anything can happen. And it's a fine line to walk. You never want to take profits too soon if you can help it. But on the flip side, you want to protect risk. And I believe that having some type of profit protection plan in place, like what I just mentioned, and you can take this any way with which you want, it makes a lot of sense. Now, if the markets would have stayed flat yesterday, would I have put this in? Probably not. I would have gotten out at 234, would have still been my number. But by doing that, if you do have a bit of a profit in place, I think it makes sense to maybe tighten up the stop loss or whatever mechanism you're using to get out of a trade in some way, shape, or form. And that is the strategy block for today with the mute button not on.
There you go. It's always better, I find, when the mute button is not activated. It allows the strategy to come forth loud and clear. Meanwhile, speaking of loud and clear, it's time for us to hear you guys loud and clear we got time, a little quick mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
I don't have too much time, so we'll do it quick here today. This is actually a fun one. Came a little while ago. Mr. Rock Lobster comes from a regular listener. He's written in before, I believe. Brian Collimer. I'm not sure if he lives in Vermont or what it is, but he sent a great photo of a car in front of him with Vermont license plates. And the plate, I'm not sure if you've seen this, Mr. Rock Lobster. Look at the notes. Guess what the plate was, Mr. Rock Lobster?
Just saw it.
I'm guessing from your laughter that you saw it. That is fantastic. So yeah, he was so taken aback by it. He grabbed his phone and took a quick picture and sent it off to us. We love our audience. They're so with it. Driving with one hand, taking pictures with the other. But that was hilarious. Umbrage, and it's a Vermont plate. So he had of course the follow-up question of when did you move to Vermont, sir? Because clearly no one else could have such a plate, sir.
You got to send him a mug or a shirt. I like that. That's really keeping your eyes peeled.
You should send them like a free year of Pit Chat or something. Why am I giving out all the prizes? You got to give out prizes for the other stuff. You give out prizes. A free day in the life of the Rock Lobster. How about that? Go lobster fishing, some ice skating, all that fun stuff.
You don't do that on the same day.
That's true. That would be kind of hard. We got, let's see, that was a good one. So Mr. Rock Lobster, he'll be sending you some great prizes. We're already giving out prizes. By the way, if you're wondering where the prizes are for the Broker Madness, we got them coming. We're going to pick them. Actually, took a while to, as you might imagine, we had it across multiple platforms, Twitter, Facebook, Stock Twits, email, all these different platforms. We had to compile everyone, literally everybody, who participated in all that fun stuff. So we want to make sure you all had a chance. So now that the names are all tabulated, we will use the machines to pick the winner automatically, randomly. here after the show. Actually, we're going to do it after the show. So we will notify you guys if you are a winner. Of course, standard rules apply. Only U.S. folks for the actual physical prizes. If there's something digital, we can always, like the show, you can get it anywhere. The physical stuff, only for U.S. residents. I do apologize, but that's just the way it's got to be. So stay tuned for that. We'll announce that on the network and indeed on the Twitters and the social medias tomorrow. Stay tuned. Maybe you too. In fact, we were just putting together some of the items we're going to put in that options swag box. It's got some cool stuff. We've got, we amass a lot of cool stuff over here. Some of it is you can't get anymore. They're from entities that, shall we say, have gone the way of the dodo. But we still have some other items in our storage. So we're going to put together some a cool sampler of the options initiative. That's, of course, just for the swag box. You can also win, of course, some cool options insider gear. So we may be asking some of you for your shirt or jacket sizes, so stay tuned for that. And, of course, one lucky winner will also win a Amazon Echo Dot. So if you want to engage, you can listen to the option block and vol views and all of our shows. Just say, Alexa, play the option block. It'll do it for you. So there you go. You can get that and just have more access to our shows wherever you go. Meanwhile, we got to keep on rolling to our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. By the way, there were a lot of good questions about the put spread we talked about this past episode, and a lot of you were confused about what the hell happened there. How do you get assigned on two and how all that works? So I think we'll explore. Don't worry, we're going to explore those mysteries in more depth. Maybe on Monday's show we have a little more time on the mail block, because I know a lot of you were confused by how the heck that happens, how assignment works, why would someone be assigned, all that stuff. So you were scared our spread's no longer of their value, they're too confusing. Don't worry, we'll set you at ease, we'll calm you down. So stay tuned for Monday's show when we get into that. Meanwhile, though, let's check it back in with our cohorts. I think Uncle Mike is rested up from his epic strategy block. Uncle Mike, what are you watching for the rest of this week, sir?
Of course, you got non-farm. I think everyone and their uncle is going to be watching that. Watching any news to see how the Trump relationship are going with the Chinese. So I would say mostly macro things and non-farm.
There you go. Mostly macro and non-farm. Mr. Rock Lobster, same question for you. What are you watching the rest of this week, sir?
I think the same stuff. Craziness out of Washington. If we can make nice with the Chinese, I think that probably works for everybody. And the non-farm payroll number, and to see if actually we can see this, sees a little break in the future price. So we will see. We will see.
You know what we won't see, though, is more show, because that music means we have come to the end of yet another epic foray through the world of options. Started off talking about all things VIX and S&P and volatility and some of the things that are catching our eye out there, as well as Valeant, which is clearly catching a lot of your eyes out there. I'm always hesitant to discuss those ones because I know there's so much vitriol all around them. Every now and then it's kind of worth checking in those and the Teslas and some of those, shall we say, those scandal-type names that always get people up in arms. And then, of course, we did a lot of unusual activity, including JetBlue and Ford. Not a lot of love for Ford out there, so stay tuned for that one, as well as VRX, potentially more size puts to go, and a lot of those names as well, so keep an eye out for those. And then, of course, the Rock Lobster moved to Vermont. Didn't tell us about it. How could he do such a thing? He's so inextricably drawn. He's linked to Maine now. He can never really undo that. But apparently he has moved to Vermont. And then, of course, non-farms on the docket tomorrow. Aside from that, though, let's check back in with my cohorts one more time. Let's start with you, Uncle Mike. What is cooking in the land of all things RCM Wealth Advisors?
Well, we actually are offering up the Hour of Power. Here's what I mean by that. We had the Pepsi Challenge a couple weeks ago, but now this week, probably we're going to do it for a couple weeks just to see how it goes. The Hour of Power. Call me up if you are interested in trading under the RCM umbrella and seeing if it works for you. If you sign up and become a client of RCM, we will throw in 1 hour with Andrew. Yes, that is correct. You get to talk to Andrew for 1 full hour and ask him anything you want about trading. He'll talk to you about the VIX. He'll talk to you about term structure. He will talk to you about anything your heart could possibly desire. And I think you'll like it. So with that, if you are interested in learning about the Hour of Power promotion that we have going at RCM, feel free to give me a call, 312-212-3531, or shoot me an email at mtosaw@rcmfs.com.
Well, there we go. I never had a co-host promote another co-host before. I kind of like it. So I'm guessing, Mr. Rock Lobster, you may have a similar promotion up your sleeve.
Yes.
Whatever could you possibly talk about?
Save some money trading and learn something for me, because heck, I like myself, so I'm sure I will have a good time talking to you, even though maybe you might not. Yes, go check out, contact Mike at RCM, and we're trying to see if we could get people a little more excited about saving money on commissions. But and so we thought I would help people out for an hour, so if they had direct questions, things like that, where it's hard to get answers you want. I'd be happy to help. So contact Mike at RCM.
There you go. I wonder how that came about. Magical mystery how these things come about in the ether off of the show. I just pretend there's only showtime to me. Outside the show, nothing else really happens of any consequence. But check them out. Look at them, the two of them cross-promoting here. What a lovely thing, bringing worlds and nations together. Speaking of bringing together, I hope we'll bring you back here. Those of you who joined us live for tomorrow's programming, we got Vol Views coming up, noon Central, 1 p.m. Eastern, followed hot on its heels at 1:30 p.m. Central, 2:30 p.m. Eastern by, of course, TWIFO, This Week in Futures Options. So if you're into all things volatility, VIX, VXX, VIX Futures Options, all that kind of fun stuff, tune in for Vol Views. If you're interested in vol, but on the commodity side, as well as unusual activity, all that cool stuff, so WTI, gold, whatever the heck is floating our boats this week, tune in to TWIFO for that. And on behalf of the Rock Lobster and Uncle Mike, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing, and of course sending in such great questions. Keep them coming. And we'll see you next time for more The Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.